गुड इवनिंग, नमस्ते, सत श्री अकाल, आदाब। मैं हूं आपका होस्ट और दोस्त आदित्य त्रिपाठी, फिर आपके साथ एक इंटरेस्टिंग वेबिनार लेते आते हुए। एक्सिस म्यूचुअल फंड का करंट एनएफओ एक्सिस मोमेंटम फंड चालू है, और इस फंड के बारे में हमें बताने आ रहे हैं आज हमारे साथ हम स्पेशल गेस्ट कार्तिक सर। हाय कार्तिक सर, हाउ आर यू?
I'm fine. Thanks for having me.
So, Karthik sir is an investment management professional with primary expertise in systematic strategy, portfolio management, product development, research, and has more than a decade of experience in quantitative analysis and financial modeling. And currently, sir is also the fund manager of the NFO Axis Momentum Fund. Sir, the floor is to you. Please enlighten us with what exactly is Axis Momentum Fund and how should we invest in it.
So let me first share the presentation with you. Just confirm when you're able to see it.
Yes, sir, we can see it, sir.
Okay. So a couple of things. We will touch on what is momentum. Momentum काम क्यों करता है? Why is it a good style to invest in? Momentum के क्या key features हैं? Third, we will talk about Axis Momentum Fund and what is the difference between Axis Momentum Fund and some of the competitive offerings out there in the same category. Right? So to start with, if I were to give a parallel to cricket, momentum, in the sense of momentum, typically जब एक batsman has done well for, let's say, last 8 से 10 inning के लिए, and the batsman is coming out to bat, then most of us feel confident that the batsman might do something meaningful given that he's done well over the last 10, 12 innings. Similarly, when somebody's been performing poorly over that period, we are very jittery when that person comes on to bat because he hasn't done anything well during the previous 10, 12 innings. So effectively, what we say in cricketing terms is batsman का form खराब है या batsman का form बहुत अच्छा है. So the term form, what we refer to in cricket, the parallel term for form in investing is momentum. And if you notice, the term I used is the parallel term for form in investing, not just equity investing, but investing across asset classes. Momentum, जो concept है, it works across asset classes, which is equities, forex, interest rate, commodities. It works across asset classes, works across the globe. So it is a very proven concept. And not just in equities, but even in daily life. For instance, take this example of UPI. Actually, if you look at the growth from 1819 to 1920, numbers were quite significant. But kyunki the subsequent increase has been so good in terms of volumes of transaction that the scale kind of dwarfs the improvement from 1890 to 1920. But effectively, adoption of UPI started slowly. Thanks to COVID, it got a good boost. But then subsequently, as mobile prices, 5G mobile handsets prices came down, and internet prices came down, and the infrastructure for UPI improved in general. The number of transactions kind of took off exponentially. That was a classic case of momentum for you. Second thing, smartphone adoption started out slowly. iPhone was the only competitive offering out there, and then after that, if you remember, we had Samsungs, HTCs, the Chinese mobile providers, and जैसे prices affordable होते गए, basically the adoption of smartphones kicked in, and then the momentum was strong, and finally it kind of tapered off. So momentum is not just specific to equity markets or investing in general, but it applies to daily life as well. So then the question is, why does momentum actually work? Momentum works because what we call in financial theory हम इसे under reaction या over reaction कहते हैं. So by that, to put it simplistically, what we mean is market the information ko, and it doesn't digest it at the same point or the same day or the same time. It digests it over a period of time. So by that, what I mean is, let's say we are in the midst of earnings season now and a company declares good numbers. And because it has declared good numbers, आज के स्टॉक रिएक्शन में तो हमें एक पॉजिटिव रिएक्शन दिखेगा, बट सब्सिक्वेंटली इट डजंट मीन कि स्टॉक प्राइस कहीं अगले दिन या अगले हफ्ते, इट डजंट मीन दैट स्टॉक प्राइस कुछ नहीं करेगा, बट इट स्टिल कीप्स रिएक्टिंग पॉजिटिवली टू दैट अर्निंग्स इंफॉर्मेशन इफ दैट इज सस्टेनेबल. So then that information is slowly incorporated in stages, but it is not incorporated on one day. That is a simple example of how underreaction or overreaction works. Or in other case, typically, let's say you have a sector or a stock that hasn't done well for the last 2 years, and suddenly the company comes out and says the business fundamentals look good over the next 1.5 years, and initially पूरा मार्केट नहीं मानेगा, the typical reaction will be like ये कहानी मैंने अभी हम लोग सुनते आ रहे हैं लास्ट 2 साल से, but we have not seen an improvement, and so typically market will ignore that reaction. Now, fast forward 1 quarter, if the company delivers better results and reiterates the guidance, then maybe some smart investors who understand the sector will start taking small positions. So price momentum starts building up. If this happens for a couple more quarters, the next thing you know, the entire market jumps in saying sector has turned around, company has turned around, and momentum kind of kicks in. So the information kind of gradually builds into the stock. This is why you get a momentum effect. And the same thing on the downside. जब कोई stock last 2 साल से चला हो and पहला जब negative information आता है, typically market tends to ignore it, saying the performance has been so good over the last 2 years, एक हाथ negative point is an aberration, we should ignore it. But subsequently, when you get multiple negative points, and then you see momentum on the downside, जहां stock बहुत steeply it corrects over a certain time frame. So momentum works both on the upside and downside because of what we call as underreaction. Now, Jess, as I had mentioned previously, if you look at this chart, this is basically saying that momentum works even in developed markets. So this is momentum in US. You have the US momentum index versus the US normal MSCI US index. As you can see, it has done quite well. In fact, if the audience may recollect, 6-7 months back, we used to talk about Mag 7 or the Tech 7 stocks that did extremely well. That was a classic case of momentum where those stocks did well for quite some time. Or agar aap index analyze karoge without those 7 stocks, pretty much the index did very little except for those 7 stocks. So that was a classic case of momentum. Now, moving on, I want to highlight 4 things about momentum, which I think is quite critical. First is that momentum जो है, it's quite adaptable, flexible है, it has no prejudices. Momentum का एक ही motto है, which is like the price is right, market is right. अगर मार्केट में कोई थीम चलता है या फिर स्टॉक चलता है या फिर सेक्टर चलता है which is sustainable, then momentum portfolio will start reflecting those themes, be it at a stock level, be it at a sector level or a style level. So अगर let's say quality चलता है, तो then for an extended period of time, then momentum portfolio will have more quality stocks. And if value works for a reasonable period of time, like it has been the case over the last couple of years, then your momentum portfolio will start reflecting more value stocks. So where to position, whether to be in quality or to be in value or to be in growth, अगर ये क्वेश्चन आपके मन में है, तो then the best thing is leave it to momentum. Momentum time करेगा and will position you correctly based on what is working in the market, but with a slight lag. क्योंकि initially we have to analyze initial set of returns to kind of establish कि trend valid है कि trend transient है. So once we've analyzed that, then we can take a position in those styles and stocks and themes. But so it will initially take time, but then it will position you correctly once the themes are identified. So to kind of make that point, we have Nifty quality index performance, momentum index performance, and value index performance on an annual basis from 2010. Every year, the best performer is in green, the worst performer is in red, and the middle performer is in yellow. What you can notice is, if you ignore all the numbers for a second, momentum has most number of yellows. So it is the consistent second performer. Obviously, it has very few bad years because in styles that are performing poorly, momentum doesn't have as much exposure. So it has very few bad years. And similarly, it has few good years as well because initial set of returns have to be given up to establish the trend. So which is why it is a consistent second performer. But look at the end of that period, CAGR, on a CAGR basis, momentum has returned 20.2% on an annualized basis. Value has returned 14.2% and quality has returned 16.2%. I call it the chameleon या गिरगिट. जैसे मार्केट अपना कलर बदलता है, रंग बदलता है, मोमेंटम पोर्टफोलियो अपना स्टाइल प्रेफरेंस भी बदलता है. फॉर इंस्टेंस, in 2011, when markets were down 33%, quality was down 10%. अब आप देख सकते हैं value momentum portfolio was down 16%, much closer to quality rather than value. Fast forward to 24, this is still October 31st. Um, Value portfolio was up 29%, quality portfolio was up 17%. अब आपका momentum portfolio is up 27%, much closer to value. क्योंकि लास्ट 2 साल में value has done quite well. So because of which momentum is reflecting the fact that value has done well, and so it probably has more value stocks as it has more overlap with value as a style. So this helps you make that timing decision. The same thing with cap size. So what I've done here is I've taken Nifty 500 Momentum 50 index और हर पीरियड पे लार्ज कैप कंपोजिशन कितना है, मिड कैप कितना है, स्मॉल कैप कितना है, वी काइंड ऑफ चार्टेड आउट थ्रू द एंटायर पीरियड. And what you notice is that post COVID in 2020, when the markets were very concentrated, obviously large caps were doing well, which is why आपके portfolio में large cap composition was close to 60% and mid cap and small cap constituted around 40%. Fast forward to 2022, जब market काफी broad based था, mid caps and small caps were doing extremely well. अब आपका large cap exposure has reduced from 70% to 30%, whereas mid and small together constitute around 60%. So effectively, this also helps you not just do style timing, but it also helps you do cap timing in the sense कि आपको whether if you have questions on अगर आपको large cap में invest करना चाहिए या mid या small में, then leave it to momentum. Momentum will kind of make that decision for you. As I said previously, with a lag, but it will kind of make that decision for you. Those are the good aspects. So what is the catch in here? The catch in here is momentum is a slightly higher risk strategy. अब 5 साल के if you look at the 5-year data, आप देख सकते हैं मोमेंटम पोर्टफोलियो का वॉलिटिलिटी है 19.2 एंड ब्रॉडर इंडेक्स का वॉलिटिलिटी है अराउंड 18.8, सो स्लाइटली हायर रिस्क. बट लुक एट द रिटर्न्स. मोमेंटम ने आपको ऑलमोस्ट 6% हायर रिटर्न्स दिए कंपेयर टू the broader indexes. So while it is slightly higher risk, but it compensates for you with higher returns. So returns are much higher and are commensurate with what the kind of risk that you are taking. Right? Lastly, we all say very casually कि market गिर रहा है इसलिए momentum underperform कर रहा है. Actually, that is not true. Momentum doesn't have to underperform in a market when market is correcting. Momentum of stock and market direction में बहुत फर्क है. For instance, look at 2011 जब market 26% से गिरा था, momentum index fell only by 16%, so almost 10% का outperformance था. Similarly, in 2020, during the year of COVID, in Feb and March of 2020, while markets were falling, momentum index actually outperformed broader markets. So, question then is, when will momentum underperform? To construct momentum, हम price returns analyze करते हैं for a period of 1 month to 12 months. तो एक बार वो प्राइस ट्रेंड एस्टैब्लिश हो जाता है तो हम उन स्टॉक्स में इन्वेस्ट करते हैं जहां प्राइस ट्रेंड्स काफी स्ट्रांग है. अगर मार्केट में ऐसे कुछ डेवलपमेंट्स होते हैं, बीट पॉलिटिकल या इकोनॉमिक, जिसके वजह से वो जो ट्रेंड्स हैं वो इररेलेवेंट हो जाते हैं, फिर देन वी हैव अ प्रॉब्लम वेयर momentum can underperform. For instance, especially in black swan like cases, look at 2008 and 2009. 2008 first markets fell by 57%, 2009 markets went up by 91%. Because the change that happened was in such short time and was so fierce that momentum could not adjust as quickly, which is why it underperformed in 2008 and in 2009, which was an up market. So what is important is that the trends that have been established need to continue, which we see happens most of the time. 83% of the time, momentum as a strategy works, except for cases where you have like black swan like scenario, jahan there is a sharp change in market in a very short period of time, in which case momentum will underperform. But barring that, momentum does a good job of performing across the cycle. So that is momentum for you. 4 main things to highlight. Momentum is the timer for you. अगर आपको कोई शंका है या क्वेश्चन है कि आपको लार्ज कैप में इन्वेस्ट करना चाहिए या स्मॉल कैप में या फिर क्वालिटी या ग्रोथ या वैल्यू हाउस में, then leave it to momentum. Momentum will do the job for you. Second, just to reiterate, it does well both on the up cycle and down cycle. What we need to be aware of, it can underperform during phases of sharp market movements where the underlying drivers change. Third is that it is slightly higher risk, but it can compensates for that higher risk, which much higher returns. Those are the main things about momentum. So we come down to Axis Momentum Fund, the way we are going to manage our momentum strategy. So this universe will typically have 500 stocks. Is category ka benchmark and Nifty 500, so you'll have 500 stocks. From those 500 stocks, we will filter out close to 100 stocks for two reasons. Predominantly two reasons. Is one is that the tails of Nifty 500 liquidity or market volume or average traded volume, yeah, value, average traded value is extremely limited. And especially when market is going through a correction, that liquidity can dry up pretty quickly. So we eliminated where around 70 to 80 stocks for two reasons. One, where liquidity is stretched, and also where stocks have recently IPO'd. And if stocks have recently IPO'd, we don't have the necessary price history to calculate the stock trends, which is why we will kind of eliminate those stocks. So we are left with around 410 to 415 stocks. This is a moving number. It changes every month, but as of today, it is around 410 to 415 stocks. Then for those 415 stocks, we will look at calculating the momentum score. Momentum score is calculated by looking at a range of price returns going from 1 month to 12 month. For instance, 1, 3, 6, 1 month, 3 months, 6 month, and 12 month. For what we mean by that is we could look at returns during that period, or and those stocks where returns is consistently higher, it will get a large momentum score, and in stocks where the returns are consistently negative or consistently lower than the markets, it will get a low momentum score. Obviously, for the stocks that have a high momentum score, the weight allocation will be larger, and for stocks that have low momentum score, weight allocation will be lower. But to decide the weight, we will do two things. We'll combine it with two risk aspects. The first risk aspect is liquidity of the stock. Agar if we have two stocks with similar momentum score, but liquidity is very different, so one stock is more liquid than the other, then the liquid stock will get higher weightage, and the relatively illiquid stock will get lower weightage. Second, we will look at the risk of the stock. So let's say there are two stocks with similar momentum scores. Here you can think about stock A and stock B. X-axis may we have the momentum score. Y-axis may we have the risk. Obviously, we want stocks that have lower risk, and we want stocks that have high momentum score. But let's say we've got two stocks with similar momentum score, but risk profile is very different. Then we will go with the stock that has the lower risk, or more weight will be allocated to the stock with lower momentum score. Right? Oh, sorry, with lower risk. I'll take that back. So more weight will be allocated to the stock with lower risk, given that momentum scores are same. So we do this consistently across all the stocks in our portfolio, as a result of which we should be able to control for the slightly higher risk that the strategy comes with. You cannot eliminate it, but we can try and control for it. This is our model portfolio. As you can see, the outperformance over the last 15 years is 6.6% on a yearly basis. Just a heads up, this is a gross number. You would have to adjust the expense ratio against it. But even if you do it, the performance across the cycle is quite strong, with 3 years of underperformance, 2013, 16, and 18. And like every strategy, while it works well over the cycle, it will have its years of underperformance, and in this case it was 3 years, which is 2013, 16, and 18. Sorry. And we talked about risk. So if you look at the drawdowns over the last 15 years, over this period, the maximum benchmark drawdown was 29%. The strategy drawdown was 25%. And just to kind of clarify, drawdown is how much the markets fell from the previous peak. So during COVID period, markets fell by 29%, whereas the strategy fell by 25%. Right. So to kind of summarize, 4 reasons why you'd want to look at the Axis Momentum Fund. First, momentum as a strategy does extremely well across cycles. Second, it is your style timer. If you don't know where to invest, value, growth, quality, low wall, large, mid, small, leave it to momentum. Momentum will do the timing for you, and it is a good timer in that case. Third, we will control for risk by by ensuring that the stock sizing, sector sizing is all as per the requirement. And fourth, because this is a niche category, this is a new category, a lot of investors don't have exposure to this. So if you were to combine this with this strategy with your current set of funds, you will be adding something new to your portfolio of funds. You will not be kind of doubling down on the same set of ideas. So that should also give rise to diversification. With this, I'll stop here. Happy to take questions going forward. Aditya, you're on mute.
Thank you, Karthik sir, for making us understand about the Access Momentum Fund. So there are a few questions from the audience, and I would like to ask you about it. So the first question is, how does the fund utilize price trends and momentum indicators in its investment strategy?
Uh, so the primary way of selecting stocks, or the only way of selecting stock, is by looking at price trends. So जैसे मैंने कहा, we will look at price trends going from 1 month to 12 months. We look at different time periods, and the more consistent the price trend is, if the stock price trend is consistently upwards or consistently better than markets, then it will get a better momentum score. And in stocks where the price trend is consistently poor than the peers in the market, then it will get a lower momentum score. And obviously, the logic here is higher the momentum score, higher is the future expected returns, and hence the weight allocation will be larger, controlling for risk. So that is how we use it in the momentum portfolio.
Okay. This question is from Utkarsh. The question is, how do you control exposure to sector or stock concentration within the fund?
So stock ke liye, what we do is we look at the liquidity of the stock. So basically, as I said, liquidity meaning market value traded, या फिर market volume traded. Value is the right one. Market value traded, and depending on how liquid the stock is, we will decide how much weight to allocate. So if the stock is relatively illiquid, then the weight allocation will be less. And if the stock is a large cap with high liquidity, then the weight potentially in the portfolio could be higher. Because at the end of the day, we want to get in and get out with very little pain. We want to get out efficiently as well, or get in and get out efficiently as well. So, which is why we'll size it based on liquidity.
Okay.
Um, and with regards to sector, there will be sector limits where we'll ensure that we don't get wild sector tilts and the portfolio remains diversified. Just to kind of clarify on that question, this portfolio is a completely diversified portfolio from a sector basis, from a cap basis. It is thematic because it's based on the theme momentum, but it is very unlike other thematic category portfolios like your energy portfolio or auto portfolio, where it gives exposure to only one sector. Here you'll get exposure to all sectors, and you'll get exposure to all large, mid, and small. So it is a completely diversified portfolio, with the main driver of stock selection being price trends.
Okay. So, this is from Rahul. So, this question is quite interesting. So, do you believe in an ideal customer for Access Momentum Fund? Well, what kind of people or what kind of age group can be actually be an ideal customer for Access Momentum Fund? And if
Mhm.
they're investing, what should they consider along with it in the portfolio?
Uh, Access Momentum Fund essentially can be part of any investor portfolio. Because, as I mentioned, for two reasons. One, it is completely diversified from a sector perspective, it is completely diversified from a cap perspective. From a risk perspective, you can think about it similar to your multi cap fund category, or a mid cap kind of fund category. That is the kind of risk that it will have. So it can be part of any person's portfolio of funds. The good thing is that because this category is new, because the stock selection process is new, not many investors have exposure to these stocks and themes that get captured through a momentum portfolio. Now, with regards to how much allocation there should be to this fund, now this is not a house view, but this is my personal view. I think if it is a conservative investor, I think max you are looking at 7 to 10% investment in this strategy.
I was thinking about it, and there's some few questions from my own.
Mm,
One is particularly, so now this consists of large cap, mid cap, and small cap, all the three stocks. But do
mm,
we have a bifurcation of it? Like how we gonna do it? And second, I was trying to understand how this momentum would work as an investor myself.
mm,
And this is where the first question was: suppose if a stock in small cap or a mid cap is not performing,
mm,
suppose we bought at, so the stock starts at 72, we bought at 82. We so it went to 120, it came back to 110, and we sold at 110.
Yeah.
But then do we remove that stocks and bring a new one, or how does it work?
So I'll take your second question first.
Hmm.
The hypothetical case where you start at 70. I mean, you establish at 82 key trend काफी अच्छा है, and then you invest in that stock at 82. You exit at 108. Now there are two ways it can happen. When you exit at 108, because the momentum has now kind of slowed down because it came off from 110 or 112. Let's say now the momentum has slowed off. Now you need to sell it. When you sell it, there are two ways that weight can be reallocated. One, maybe your existing another stock in your same portfolio in the portfolio could have an excellent momentum, so you can top it up. Or else you look at opportunities in the universe. As I said, the universe is around 400 stocks as it stands today. So we look at opportunities in the portfolio and opportunities outside of the portfolio. Wherever there is the best opportunity, we will kind of reallocate that weight. Typically, that is how it would work. Does that answer your second
Yeah,
part of the
but does it
question?
have a timeline? As in, we'll wait for because normally during the benchmark or the research that we have, it can be a month, it can be a 3 month research, it can be a 6 month research. As an idle investor, I'm just asking. So we don't know the time period exactly. When do you take a new stock, or when do you profile a stock?
Okay, so we will rebalance this portfolio every month. So we will
Okay.
relook at the portfolio. We'll take a relook at the universe every month, at least every month. So this will happen every month, and whenever we spot changes or whenever we see stocks momentum is weakening or strengthening, we will act accordingly. So we will do this exercise every month.
Okay.
And it's a
I
great
understood. Yeah.
segue because a lot of the passive indexes actually, which are quite popular, only rebalance once in 6 months. They don't look at the portfolio during in between that time frame. For instance, the Nifty indexes only rebalance twice a year, or June and December, and they don't look at it in between. Whereas in our case, we will rebalance the portfolio on a monthly basis.
Okay. That answered my question. And the first question. Eventually, yeah. Go ahead, please.
Sorry, the first question with regards to allocation to large,
Yeah.
mid, and small.
Small cap.
See,
Yeah.
at the end of the day, if momentum is stronger in large cap, your momentum fund will have more exposure to large cap. And in cases like the slide highlights, if you are in December of 2022 and mid caps and small caps have much higher momentum, then your large cap composition will be lower. So I will not control for. So basically, I will let the portfolio express its view on large, mid, and small. But what I will do is the position sizes will be capped based on liquidity. So typically what happens is agar large caps mein momentum hai, because large cap is liquid, the average position size tends to be higher, and hence number of stocks in the portfolio tends to be lower. If the momentum is more in mid and small cap stocks, because the liquidity is lower there, the average sizes tend to be low, average position size tend to be low, and the number of stocks tend to be higher. So that is how we will ensure liquidity. But if wherever there is momentum, be it in large, mid, or small, we will let the portfolio express that view.
Thank you. So this is by Ashwin. Uh, what current market trends are you observing that could impact the performance of Axis Momentum Fund, if it does?
So I said the correction that we are seeing right now, I think is a gradual correction. It is not a one where we are panicking, or nor it is a one of black swan event. We have had a very strong market. Last year markets were up 30%, 35%, depending on whether you're looking at large, mid, or small. Again, this year till end of August, we were up another 25, 30%. So the correction we are seeing is par for the course. It is normal. So I don't think anything we need to worry about the correction that we are seeing from a market perspective as of this point of time. Having said that, as I said, another caveat to add, it is not necessary that momentum underperforms during down cycles. As I showed using this graph, momentum can outperform markets during down cycles as well. So that is the other caveat. In terms of what is the worry is that, let's say there is a sudden market development where the trends become irrelevant. So let's say there is a political instability in Middle East or something like that, because of which oil prices shoot up. Then the trends that were established over the last 1 year are become irrelevant, and so momentum will take time to identify the new trend. So then during that period, it could underperform. But having said that, it's very difficult to predict these developments. They happen once in a decade or so. So it is better we don't try and predict these things and invest in a disciplined way. In which case, momentum does quite well.
Investors watching at all our social media platforms, we'll take few more questions before we move ahead to the webinar, end of the webinar. So, sir, there is a question from Himanshu. Okay, what is your outlook for Axis Momentum Fund over the next few years, and how do you plan to adapt to changing market conditions?
So, with regards to changing market conditions, as I said, this is an active fund. This is not a passive fund. So, we will continue to work on research. And wherever we see opportunities to improve the model, to improve the portfolio, to improve the process, we will continue to make those improvements. That is how we intend to improve on an ongoing basis, or that is how we intend to respond to changing market conditions on an ongoing basis. In terms of what we expect in terms of cycle, if we were to look at history, if you look at the last 5 years, look at 5 year data, Nifty 200 total return index had given 15%, whereas Nifty 200 momentum 30 index had given 21%. So that was an outperformance of 5 to 6% on a gross basis. So I think if we go by that number, that should be a very good outcome for investors if this again plays out over the longer horizon.
So, coming from my end, eventually, if as an investor I want to plan on some goals or some journey, uh, how would momentum help me out in my portfolio, particularly? So, in an age of 27, 28, where I'll be planning how to buy a car or buy a house,
Mhm.
particularly, or look for some marriage cost.
Mhm.
So, is momentum a good choice to be in a portfolio? And if yes, then what kind of allocation?
So, as I said, if you are young and if you can invest for longer, I would say you can be a bit more aggressive. The previous number I gave you for 7 to 10% was conservative, assuming a normal age profile and a conservative investor, 7 to 10%. But if you're an aggressive investor, I would argue again, this is not a house view. That's a disclaimer out here. If you're an aggressive investor, you're young and willing to invest in markets for the longer cycle, then I would argue you could go high as 15, 16%. And what can momentum give you? Momentum, see, from your perspective, momentum is the timer. You stay invested in momentum. Whichever new theme emerges, whichever new style emerges, whichever new story emerges, momentum will catch that story for you, or catch that theme for you, or catch that style for you. You don't have to worry about picking or staying on top of every theme and every development in the market. The momentum index will do that for you. It will do that with a lag because it has to establish the trend first. But once established, it will do a good job of typically it does a good job of kind of positioning towards that particular trend or style or stock or sector, right? So it does that job for you. So it is your timer in terms of when to be there. Second, as I said, it is slightly higher risk, but it more than compensates with higher returns. As you can see, the risk is marginally higher, but outperformance over the last 5 years was quite material. So that is what it can do for you as a young investor. It can materially add to your wealth over time.
So, all the investors that have been listening to us from past 30 minutes, thank you for joining. Thank you, Karthik sir, for all the insights on our NFO Access Momentum Fund. It was pleasure talking to you, sir.
Thank you. Thanks a lot
Thank.
for having me. Even if you get questions post this, happy to answer post the
Sh-
session.
Sure. So for all the viewers are on our channel, please, if you want to invest in Access Momentum Fund, which is live till 6th of December, please go, and after that as well, please go on our website www.axismf.com, or you can download our app from Android Store as well as Play Store and Apple Store altogether. Thank you for tuning in. We'll be back live in another interesting webinar. Till then, your host Aditya Tripathi. See you. Take care. Bye bye.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.